Welcome back to Something More with Chris Boyd. I'm Chris Boyd, certified financial planner practitioner, and my office is Asset Management Resources. Thanks for being with us. Our show is a financial show. We hope to talk about not only those important dollar and cents issues, but also quality of life issues that make the money matters matter. And we hope you get a lot of benefit out of the things we discuss each week and each episode. And hope you tune in. As an aside, just a reminder, not only can you find us on podcasts, wherever you listen to podcasts, Spotify or Apple or Amazon or Google, whatever your preferred platform, we're also putting the show out on YouTube now. And if you like to listen to us on the radio, you can hear us on WXTK 95.1 FM on Saturdays from 3 to 5. So, and by the way, if you listen to the podcast, we hope you'll like and rate our show, because it helps to get other people to be aware of what we got going on. And let's get right into it. Let me tell you who we have joining us for this segment. Joined by Scott Birmingham again, our lead financial planner. I don't know what to call you these days, Scott. I don't know. I'm just a mess. So
Chief
anyway.
works. I like that.
Yeah. All right. And then we've got Jeff Tomaneng also joining us, one of our financial planners, and he's got a wealth advisor. Right. I see you got under your name there. You're tagged. Jeff has just about every designation you might ever want to have. Right. And so both of you, though, do have a designation that is relevant to what we're going to talk about today. You are each CDFAs, in addition to being certified financial planner practitioners. And the CDFA, Jeff, remind me again, it's certified divorce financial
analyst.
Analyst.
Correct.
Sorry, I always get hung up on what exactly.
That could be advisor.
Yeah. Yeah. But in any case, the point is someone who is knowledgeable about the issues that people go through in dealing with divorce. And both of you certainly are well aware of the kind of challenges that people deal with and how to help advise them in navigating through some of those challenges. We were just talking before we started the segment that divorce is, just very common, prevalent, something like 50% of first marriages end in divorce, and even more, 60 or so percent on second marriages end in divorce. So knowing how to plan for the issues you may be going through if you're in the position where you're dealing with a divorce, that's what we're going to talk about today. We talked about this once before in another segment. This is our second in a series of segments. Before, we talked about what do you do if you're maybe anticipating things are gearing up and look like they're leading toward divorce. What are some of the things you might need to plan for? I want to talk today about what if you're going through divorce? If you're in the midst of these kinds of issues, lots to consider. And maybe I could ask you guys to start with. This might be something that's already, maybe for the stage that we're talking about here, but how do you identify the right legal counsel? I mean, you may really need a good lawyer and someone who has expertise in this area. Jeff, I'm going to start with you, and Scott, you feel free to chime in as well. But what advice would you have for someone who may be thinking, all right, it's time. I need the right representation. How do you find the right lawyer?
I think there are websites, and Scott might be able to talk a little more about that. And the reason, I generally don't advise on that, because most of the referrals to me by divorcing clients or recently divorced are actually from the attorney. So I'm not usually seeking out divorce attorneys. They don't, while I'd ideally like for someone to come to me first to help quarterback the process of divorce, generally it's going to be a divorce attorney or someone who already has counsel.
Yeah.
But I think one of the problems I do see is consumers going to an attorney who does not specialize in divorce or family law, and they don't have that background.
A general practitioner may not be even though they've done some divorces, you want someone who's really a specialist in this kind of law.
It is very, very much helpful because then they know the judges, they know the procedures in the state that you are in the county. I think it just makes the process go a lot easier. I have worked with attorneys that they weren't as schooled on the process of divorce, and I found that they were asking like colleagues at other firms. Maybe they were sole practitioners who are doing a little bit of everything. So that has been an issue that I've seen, and I'll let Scott go from here.
What do you have to say, Scott?
Yeah, I mean, I'd mirror that, and I definitely focus on the person that works for a firm rather than a sole practitioner, just because I think having other people in the office to rely on, because there's so many ins and outs. I've just found the sole practitioners, they're great, but
you have trouble keeping up with everything and
keeping up. It's a tough business, and again, they may do a little estate planning on the side, a little real estate. You just want somebody who does nothing but divorce. So I've been lucky enough that I've worked with kind of people outside the field who do kind of divorce coaching and life coaching, and they have a huge network of people that they are comfortable with for attorneys. So that's helped.
Yeah. So you have a network when people have a need for that kind of assistance, you can help them identify.
Yeah, I go back to those people, and they know divorce attorneys in the area and that focus this way, that way. Do you need a shark? Do you need someone maybe a little more comforting? So they
different styles and different personalities fit better. One of the thoughts that was mentioned is, what are you trying to get out of the lawyer? Keep in mind, if you need a therapist, go to a therapist.
Sure.
Don't spend maybe different hourly rates, but probably both cost a fair amount. But have the right person for the right conversation.
Very true. Yeah.
And I mean, fortunately, unfortunately, I think the three of us are guilty of, not trying, but ending up playing amateur therapist for our clients, because I mean, part of our job, whether it's as a divorce financial analyst or a financial planner, is to understand our clients' needs, their emotions, and what their goals are,
and listen.
Just listening. And so, a lot of the, I think a lot of the techniques that psychotherapists use are used in financial planning and just data gathering and getting to know your client.
I've heard people doing some kind of questionable things where they go run around town to all the best divorce attorneys while they're shopping for an attorney in an effort to preclude the potential ex-spouse from having the opportunity to hire one of those other attorneys because there's a potential conflict of interest once they've spoken to.
That still happens. Yep.
I imagine that's challenging when you're dealing with that kind of.
I would say 80% of the people I've dealt with have a spouse that's making things difficult, doing things like that, or sinking their business for a year so their income looks low, or hiding assets or moving things around. So unfortunately, they're going to be difficult.
All right. Well, Scott, where should we jump in on some of these when you're actually in the midst of the divorce process? What are some of the things we need to be thinking about?
So the two main areas are assets division and cash flow. So I guess we start with cash flow. Just like we're talking with a client regularly about thinking about retirement or financial planning, we're going to think about emergency planning, having some money in the bank. One, for typical life emergencies, and then two, maybe you're moving out of the house. Maybe you need to rent a place. So how's your cash flow going to be?
It's important to remember that 2 houses cost more than housing for 2.
Right.
Essentially, like that idea that costs are going to go up in this process.
Yeah, unfortunately. So for your attorney, you're going to be putting together a cash flow page. Each person's going to put together what their expenses are, whether you're still living at home or you've moved out, what are your expenses. And then as analysts, we want the client to go a little further and think, all right, let's look down the road a year or so. You're fully divorced. Where are you living? What are your expenses going to look like then? Because that'll help us map things out. That's really difficult for a lot of folks. I mean, we ask someone their expenses these days. They come for a retirement plan and they have no idea. You're getting the nitty gritty.
People just don't know, and that's not a judgment. It's just they're used to.
Sure.
Money comes in, money goes out, and they kind of make it work that they live within their means. And as long as they're not blowing things up, they're not really too worried about it. That kind of mindset, right?
Right.
Most people just aren't that intentional about their planning around how their money comes in and goes. So that's very common, and that's not a judgment. It's just that's comfortable, right? So, but when you get into this kind of planning or any financial planning, it becomes relevant to know how much are we spending? Where is it going? And in this particular case, now you got to really figure out what can I live on? If for example, if you're going through this, and as we all have said many times, there's one person who's kind of more the knowledgeable person who deals with either paying the bills, or maybe who deals with the investments, or whatever, does the tax return, whatever it might be. And not everyone is playing the same role in their financial life in various components, that it can be difficult to kind of get up to speed when you're not the one who's been doing that.
I'm probably speaking for Jeff. I say 99% of the people who contact us for assistance, usually women, and not to be sexist, I think women are smart enough to say, maybe I don't know everything and maybe I need a little advice, versus men who, the few who have contacted me, seem to know everything and are all set, and they're very difficult to work with and don't take advice well. But so we're usually working with the person that probably needs the most help, maybe maybe earns less or hasn't worked because they've been a stay-at-home mom. So there's planning around the cash flow for that person going forward, maybe having the house on their own, maybe having the kids. And now we have to work in what's alimony and child support going to look like. So child support for most states is pretty cut and dry based on what you earn and your kids and how much time each child is spending with each parent. Not a lot of people get alimony statistically, but if you do, then you have to factor that in as well. But then what happens when that money ends? With child support probably to 18, alimony depends how long you're married. What's your life going to look like after that? Are you going to be able to kind of get ramped up if you need to earn more income, or maybe you're rolling into retirement? So both things kind of need to be mapped out.
You dropped a lot of information there, I think. Jeff, anything you want to kind of elaborate on in what was just addressed?
No, I mean, some of it is financial life planning. And, Scott talked about, let's say you had one parent who is a stay-at-home parent and is not as employable as he or she was when the kids were younger. And, allowances need to be made for that, because, if there is no alimony from the higher earning spouse, what's a reasonable lifestyle to expect for the lesser earning spouse? And, it just becomes it becomes quite the discussion. Fortunately, I've had a few cases I've worked on within the past year where the higher earning spouse was pretty cool with saying, all right, you had this sort of lifestyle. I'm willing to help you maintain that up to a certain point. But as Scott knows, that's not always the case.
Sure.
What about changing work dynamics? Do people need to think about if they've only worked part-time, starting to work full-time, or like, is that something that someone should do as they're gearing up for divorce? So something they should put off? How do you plan around some of those kind of considerations?
I just had that conversation with a client that works kind of part-time and was going to start gearing up and working full-time, or at least increase hours, have younger kids, but could increase her hours. The attorney said, why don't we wait till afterwards? Because really we want to essentially make you look like, you need X amount of dollars, rather than saying, oh, you can earn more. I mean, it's a discussion they're still going to have. You have potential, but I would think you'd be putting it off till the divorce is settled. I also, on that same scenario, same case, interesting enough, the spouse was a high earner and was interested in doing a lump sum alimony payment. Don't see that too often. Not a lot of people have that ability. For the person receiving, I thought very, very attractive. One, you get a lump sum certainty. You know where you're getting. You don't have to worry about your ex-spouse losing their job, not being consistent with their payments. So that was great. If you decided to remarry, again, that would affect things because you've gotten a lump sum, versus if you're getting alimony payments every month and you remarry, those would end. Or if she did go back to work, started earning a lot of money, spouse could take her to court and say, you're earning a lot more. I want to reduce the alimony payment. So in that case, for that person, a lump sum alimony payment, as long as it's, the number's reasonable, really is very attractive.
Yeah, there's the time value of money that comes into question there. Scott and I worked on a case last year where, again, we were, as Scott said, we were surprised that the husband was the higher earner as a husband and wife. And, he had talked about just giving the lump sum right away. So we figured out, okay, well, if you gave her $200,000, that's what that would mean, 8 years from now at a stated interest rate. Fortunately for our client, who was the wife, we were using a lower interest rate a year and a half ago than she's going to get now. So it worked in her favor. That doesn't always happen, obviously, but you certainly have to take those things into consideration.
Well, I'm in studio with Kathy Ingersoll, and she is prompting all these questions. I don't know if you guys are seeing this in our chat area, but she's got a bunch of great questions here to share with you. So I want you guys to address some of these. When someone's going through divorce, and I'm going to add to some of the things she said, she asked about should you set up an account for your direct deposit, say your paycheck or something, in your own name as opposed to a joint account. But talk about accounts, in the midst of this process. Should one empty out the joint account? Should one not empty out the joint account? Should one set up their cash flow to then not be, shared and potentially exposed? Or, what should you do? When do you start thinking about those kinds of transitional considerations?
So that's a tricky talk to your lawyer type situation, because, but also, so say you have a joint account, bank account, a lot of money in there. You could say, I'm going to take my half. But the first thing I'd say is you need to set up a journal, document all transactions, money in, money out, money you might be spending on rent or spending on the children, things like that. So if you did take half out, you may either be required to put it back in. Your attorneys may say, or documented, but it's tricky. So I would definitely talk to your attorney first, because in some states they'll say, no, you can't touch that money. But in the same case, there's scenarios
It
where
could put you in a bad light potentially if
put you in
you
a bad light. But it's not to say there aren't cases where a husband,
if you get too aggressive about what you're doing. On the other hand, the idea of setting up a separate bank account, is that prudent?
absolutely set up separate bank accounts. Absolutely set up separate credit card accounts. But I was going to just throw in, again, there are scenarios where one spouse takes it all and spends it. So, I mean, there is that scenario as well. So it is kind of, you have to kind of know what you're dealing with there.
And similarly runs up the credit card. That's something you have to worry about. So try to get off those credit cards that are joint, close out things if you can, you know, without or limiting that risk perhaps.
Right. For the credit cards, I would say you would freeze your credit card and maybe look at what would happen if you did close a credit card. Would that affect your credit score really? It depends how many credit cards you have and how much you utilize it. But I would think the first thing is to freeze it.
Just so that prevents any additional spending that might create a you know, a vengeful spending spree or something.
Exactly.
Like that.
Yeah. But for our listeners, we're also talking about some bad case scenarios here.
Yeah, not everyone has that. But we're trying to be thoughtful about what you should watch out for, I guess.
Yeah, I mean, it's not always that way. You know, ideally, you have the divorcing couple that's, you know, they're very clear about disclosing everything they have, what they need, and being reasonable with one another around things. Obviously, those situations are a joy to work with for us as planners. You know, back to the therapy question around that. Sometimes, like I had one situation earlier this year where a client was, I mean, she was vengeful. She was like, I want his this, I want his that. And then when we went through the numbers from a long-term financial planning perspective, given what she would receive, she realized, I'm going to have plenty. My kids are going to have plenty. If he's hiding some stuff, that's okay. I got what I need, what I want. And then there was no stress. She just kind of let it go. I'm not saying that she should have.
That's a really great point, just Jeff, because that's one of the things we're going to talk about in a future episode is how much do you need? How much is enough? And, you know, thinking about how do you plan, like once you know that, it can relieve you of some of the stress, in this case, some of the frustration where you can be like, fine, whatever. Yeah, great point. We have about 5 minutes left, maybe just a little shy of that, I think. Let's get on to some of the other things, Scott, when you were talking about, you talked initially about cash flow. Let's talk about assets and insurance and some of these kind of considerations.
Sure. So insurance can kind of flow over to cash flow. So if you are on the receiving end of, say, alimony or child support, you want to make sure your ex-spouse is properly insured should something happen to them. Also, that alimony and child support is disappear. So you want it documented. They have to keep a certain amount of insurance that essentially pay for that income stream that may go away. In a perfect world, you would own that insurance policy and be the beneficiary. That way, you know the premiums are being paid. You're up to date on it. But a worst case scenario, you want to at least be able to get an update yearly. I had one client who didn't qualify but was able to boost their insurance at work because they were a high earner. And I got one-time salary, so that was able to kind of take away that. But that's really key. I mean, you're counting on these payments for a certain number of years, and something happens to your ex-spouse, your cash.
Yeah, good point. Good point. We did talk a little bit about whether to move assets. Are there other things to consider when it comes to your assets?
So normally folks are initially going through, was this an asset brought into the marriage, considered possibly separate property, or was it commingled? Now it's marital property.
An inheritance is sometimes treated differently.
Inheritance, if it wasn't commingled. Student loans, I've seen a lot of times brought in as a separate debt. I saw one. So a father gifted money to a couple to purchase a home. and this was like 15 years ago. And now, as we're rolling a divorce, the father wants that money back, saying, you know,
didn't work out. It was conditional.
It was conditional. But if they got when they got a mortgage, they were required, I'm sure, to hand over a letter saying this was not a gift. This was from my father and will not be required back. So that doesn't fly.
Not alone, rather. Yeah. So that's funny. You never know what you're going to run into. I thought, one of the things that's also relevant when it comes to the idea of assets is that not all assets are equivalent. I think we touched on this maybe previously in a different episode, but the value of the house may be one thing, the value of the IRA may be the same number, but those aren't exactly the same thing. For whether it's cash flows, whether it's regarding maybe a mortgage, but whether it's after tax use. There's a lot of variables that you need to kind of dive into to think in terms of how do we do this in a way that's air quotes fair.
Right. So you have to kind of walk through each asset with the person and say, one, how is this taxed? Capital gain, income, cash is king, obviously. And then kind of what are your needs? So some people may rely heavily on getting more cash rather than retirement assets. But at the same time, I'd like to get some of those retirement assets, something to go tax deferred for a number of years. You literally have to go through it line by line. What do you need? What's important to you? What's the real cost if you were to essentially liquidate this? For homes, I would always tell folks to imagine, you're selling it. So you have to factor in the cost of selling it. 5 to 6% of
real estate commission.
Does need home improvement, to sell. Do you need to clean something up? So maybe get a home inspection. So you need to factor all those things. And then a lot of times, this is a big number. I'm working with someone right now. They possibly want to keep the house and swap over another item. Well, the house has huge gains because housing markets are fantastic. So if that person were to keep the house, sell it 5 years later, there's an extra $70,000 of possible capital gains tax that they have to think about. So housing is a big, big issue. And
when do you guys get involved in the process? Because we only have about a minute here. We got to wrap up. But how do people get help, and when should they get help in the process?
When they should get help, they should include us the second they get an attorney. Really, a lot of times though, folks will call us as they get their asset division proposal and say, "Am I getting a good deal?" So that's a little more rushed.
A little late in the game. Yeah. So right away, if you're going through it, reach out. That being said, we offer a complimentary consultation if you're going through these kind of issues. We got some great people on our team that you can speak with, and welcome you to reach out to us at amrfinancial.com. That's for asset management resources, amrfinancial.com. Or you can reach out by phone, 866-771-8901. Thanks for being with us, guys. Appreciate the update. I'm sure we'll have more to talk about on the topic in the future.
Great.
Thank you, Chris.
Okay, until next time, keep striving for something more.